Insurance agents from around the world, welcome to the Insurance Guys podcast. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Mobile, Alabama. Parade first team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and a great American. Ladies and gentlemen, please put your hands together and welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
This is podcast number 400 and something, and the first one I've ever done in a suit jacket.
There you go.
But I just felt like wearing a suit jacket, so here we are.
Bradley, tell everybody where we are today. I'm proud to be an American today. Tell them where we are.
We're at Progressive Insurance Home Office, I guess.
That's it. Headquarters for Progressive. Yeah. In the beautiful, luxurious Cleveland, Ohio. And Bradley,
it's very cold.
Before I bring my all-star guest on today, I think we need to talk a little bit about Scott getting to ride in a Cybertruck this morning.
Yeah.
I'm going to have to buy one of those.
Yeah.
We had breakfast this morning with the incomparable Seth Zaremba. Talked a lot about a lot of things.
Yep.
Excited about everything Seth's got going on these days, but
Seth gets up at 2:00 in the morning, so he's always good for breakfast.
He's ready. He was ready. But more importantly, he was driving my Cybertruck that I now want.
So it's going to kill me if you get one before me.
Oh, you want one?
Oh yeah, yeah. I've got one ordered. I hadn't pushed the button to buy it. Yeah.
What are we talking? $30,000-$40,000 for one of those?
I'm pointing my thumb up.
Up.
Yeah, up.
100? Is it 100?
Down.
Oh, a little bit.
Yeah.
Okay. Well, if I work hard and save some money and
I'll co-sign for you.
No, you won't. No, you won't. There's no way you would. But I do think I want one of those. Yeah. I told you 2 weeks ago, I on a group chat, I told Bradley, I said, okay, the next vehicle I buy, I want it to drive me around.
Yep.
And I'll be damned if that thing wasn't driving him around today. He never touched the steering wheel.
And when you said that, you said, don't say Tesla, Bradley. And I'm like, no, it's
your only option.
Yeah. Yeah. Either that or hire a driver.
Guys, we got an all-star guest on today. I am proud and humbled to be at the headquarters for Progressive today. This has been a long time coming, and I want to give him the introduction that he's always deserved. Ladies and gentlemen, he is originally from Richmond, Massachusetts. He currently resides in Cleveland, Ohio. He's a graduate of Middlebury College with a bachelor's degree and then a MBA, Master of Business Administration from Northwestern. Smart guy, unlike myself, who barely scratched the 9th grade. He has 4 beautiful kids, ages 17 to 25, and it says his spirit animal is a golden retriever. I think that's mine too, actually. He's been at Progressive for 22 years. He's managed several states, and he's ran their commercial lines R&D, and he is now the general manager for agency distribution. Ladies and gentlemen, it is my profound honor today to introduce to you first-time guest on the IGP, Mr. Corey Fischer. How are you, Corey?
I'm excellent. Thanks for having me.
Dude, I am so excited to be here. Bradley and I got to have a dinner with you and Mark and Diana last night, and it was a great time. And I just want to thank you for the hospitality that you have shown us since we've been up here. It's been a lot of fun, but we've got a lot to talk about today. But before we get into all that, climb in my DeLorean. Let's go back in time for just a minute. How did we get to Progressive?
Okay. Well, first of all, I don't think Bradley is 6.
Yeah,
he's at least a minimum
6'3",
minimum 6'4".
Yeah, right.
Fake
I
news.
also don't think he's a sophomore, but we can.
It's cost me so many opportunities because people are like, "I'm looking for the 6'3" guy."
You were here because I thought you were 6'3".
Yeah. How did I get to Progressive initially? If I go back 23 years ago, I was living in Chicago at the time with my wife Allison. We'd had our first child, Lucy, who was 1 at the time. I was working in consulting for a company owned by Marsh. And we found out our second child was on the way. And so that led us to thinking about where we wanted to raise a family. Neither of us, kind of pictured living in or around Chicago. And consulting, I really loved the delivery side, the people I got to work with, the problems we got to work on. But the further up you go, the more you get into selling work. So I wasn't sure if that was the long-term intent. So we started making a list of places we wanted to live, companies that we thought could be interesting, and people I could reach out to. One of the people I reached out to, I'd actually worked with. He had a startup before the dot-com bubble burst in 2001. We worked on bringing this to market to sell used auto parts online. Right.
Okay.
So, I'm surprised why that didn't quite work out.
Yeah.
So he had landed a Progressive. I'd reached out to understand his perception, and he couldn't have said better things about the culture, the talent of the people that he worked here with, the problems we got to work on, and where he thought the company was going. So I came over and did an informational interview. Ultimately, did the formal interview process, and I was hired as a commercial lines product manager. So that was also appealing because in consulting you don't own anything, and as a product manager here at Progressive, you have profit and loss responsibility on day one. So you're responsible for delivering kind of growth and profit in the states that you're assigned. So it's a great place to learn about insurance, a great place to learn about the Progressive culture, and everything that that person had told me about Progressive as it came to light. So great place to have a career. 22 years later, never looked back. It's been a wonderful place.
Let's talk a little bit today. I wanted to start out with about 3 years ago on this podcast. I knew some people at Progressive at the time. I did not know you, but knew some people at Progressive, and I'd gotten into like trying to figure out like what is the split if you take the total premium at Progressive between the independent channel and, well, I'll tell you what, before we get to that, kind of deep dive for our listening audience and the 250,000 insurance agents listening to this. What is your role today? I guess deep dive a little bit into what that role entails. And then I think that can kind of go into what I was about to ask.
Sure. So I'm the general manager for agency distribution. Agency distribution, we don't own the product, the price. We don't own claims, customer service. We advocate for our agent partners on those topics. But what we do own is first and foremost all the salespeople. We have several hundred salespeople throughout the country and inside that develop those relationships, that work with our agencies to create those win-win growth, profitability opportunities. We're also responsible for all the things that are unique to agencies, like the systems that our agents use. We get a lot of feedback that our for agents-only portal and our quoting experience is the best in the industry. We own the licensing and compliance function to make sure all our agents are appointed appropriately. We have the compensation programs, data, reporting, analytics, and sales training are also part of the purview of agent distribution.
I wanted to lead with that because that flows right. And by the way, before I forget, I want to shout out to Russell Parker, my Progressive rep in North Alabama, who connected me to some degree with Corey. Told me who he was. So shout out to you, Russell. I appreciate you. You if it hadn't been for you talking to me that day and us kind of getting with Corey, then this would have never happened. So I just wanted to thank you for that.
So it was funny, because we've shot our shot with other folks in the industry, different carriers and large companies and stuff, and you've seen it enough that you can tell when it's going to happen, when it's not going to happen. And so you had that conversation with Russell, and he told me about it. I was like, okay. Well, then like a week later, my rep shows up to my office, John Sullivan, and he sits down and he goes, how big's that podcast you do? And we've never had a conversation about that. And so I was like, oh, okay. People are talking, and he goes, well, you're going to love Corey. I was like, oh, okay, this might actually happen.
That's been the general consensus.
And just so you guys know, like, I think it says a lot for a big company like Progressive. This happened pretty quick. Yeah. About a month and a half,
Absolutely.
Couple months, something like that. Barring Scott having a heart attack.
That could have thrown some monkey wrench into things. But
I hate to tell you, Scott, if you, I'm glad you're here, but I still would have came. Just so
Oh
we
yeah, I know. I 100% knew
we
that.
would have had you
Yeah,
here on
yeah.
Zoom,
Oh, yeah. Yeah.
But
I would. David Carruthers was on standby to be here in my.
yeah.
If I had to. Well, anyway.
So we go 2 weeks ago. Scott and I go to the Big Eye of Georgia, and we're doing a live podcast on stage.
Mm-hmm.
And so David Carruthers was also speaking there, right? So Scott gets put in the hospital for a little brief stint the week before we go. And they'd already paid us to do this. And so I called David and I said, hey, are you able to step in since you're already going to be there in case Scott doesn't make it, because I'm still going to go. And he's like, yeah, sure. So then Scott ends up making it. We get there and I tell Scott this, like, hey, I had David, whatever. And so we're hanging out maybe like an hour before we're about to go on stage. And it becomes very apparent that Scott thinks David showed up just for that.
I didn't know he was speaking. I thought he would just came to the event
in case
Wow.
to come out of the bullpen in case I went down at the event.
Scott said, I thought, if I fell off on stage, y'all were just going to drag me off and David was going to walk up there and finish it. I was like, no.
I think the overarching theme of all this is Bradley has a lot of plan Bs.
Smart.
You got to have contingencies, man.
So 3 years ago, I get on the podcast one day and I'm like, I've been doing a little research and I've been asking some people I know at Progressive Corporate. And I have figured out that independent insurance agents write about, give or take a percentage point here, 48% of the total premium at Progressive. The rest is written by direct. This was, I believe, 3 years ago, 3 years ago. And, but the independent agents' loss ratio's a few clicks better than direct. And my first question out of the gate, Corey, is that still the case? Are we still in that, those numbers, are they pretty much accurate, or have we had any substantial change there?
Yeah, so it's pretty accurate. I'd say, I think last I looked, for year-end last year, it was close to 49%, so just under half comes through the IA channel.
Okay.
And we actually price to a similar loss ratio. We don't intentionally create separation in terms of loss ratio. Right. We have very different models. We use the experience that direct has to price direct. We use the agency experience and kind of loss rate to price agency, and we try to hit the same loss ratio overall.
Got it.
And so those differences typically are a function of, it could be luck, could be noise, could be the state, whatever kind of mix shifts we're seeing. But we try to price them to achieve the same profitability outcome from an entity standpoint.
Yeah.
That's interesting.
Let's talk about the agents listening to this would hate me if I don't bring this up. So the direct versus independent model can be somewhat controversial in the agency world. And I'll give you my thoughts on it. And this is not me saying this because I'm here. If you listen back to old podcasts, you guys that are listening to this, I've brought this up in the past. I actually like it when the carriers that we represent do have a direct division because of several reasons. The main one being, I operate in a coastal market. We have a lot of regionals. If I'm trying to sell a certain regional carrier, we have to spend extra man hours and extra time explaining who that carrier is. I don't have to do that with the ones that go direct because they've seen the commercials. They've seen, you know what I mean? Mm-hmm. It makes it easier to sell because people have heard of the company. Additionally, and I'd love to get your thoughts on this too, is there's going to be a certain customer that I don't necessarily want. Those customers are typically going to go direct. It almost weeds out some of the shopper personalities. It can weed out the adverse selection of, hey, I have a hole in my roof and I'm too embarrassed to go to an agent and say, can you insure my house with a hole in the roof? But I'll do it online. You know what I mean? Right. What are your thoughts on that as someone on the agency side, as well as, what would you say to some of these people that are like, it's our carriers competing with us. And I don't really view it as competing. It's just a different model.
Yeah. So, the way we think about it and the core is, hey, we want to be where customers want to be. So the way they want to shop, is where we want to show up. And there are customers that, they maybe just want to not talk to somebody. They want to go online. They want to get a quote. They might want to do it at night or the weekends. Maybe they have different types of needs where, that simpler experience, is suitable. But then obviously there are a lot of customers. And when you think about the $1 trillion of property and casualty and the independent agency channel being kind of the biggest distribution outlet, they value the counsel of their agent. They want the breadth of coverages that you all bring that no direct carrier can offer. They want the choice that you bring in terms of, hey, I can get you different rates. If something happens at renewal, I can find you an alternative market. And so clearly customers value what independent agents bring, and we want to be there. And I think there are some benefits. So the brand, that halo that you all get to say, hey, last year we spent somewhere between $4 and $5 billion, I think, on advertising. And so that shows up. You have a brand that customers have maybe some confidence in, that they can trust, that maybe makes it easier for you to sell them. It also gives us a scale. So, about half our premiums, the IA channel, half is direct.
Yeah.
So last year we came in close to $85 billion. Like with that scale, we have lower expenses, so we can provide lower expenses as a competitive price to our independent agents that help you, close those deals.
Well, it trickles down too, because we just launched a new marketing campaign 2 weeks ago that's primarily driven through Facebook ads. And all of the leads that are coming from these ads are going to a specific group of people at my agency. And I was talking to a person that's in sales at our company that's not getting those leads. And I was like, look, we're spending so much money on this, it's going to trickle down to you. And he's like, what do you mean? I'm like, well, people are going to see the ad, but then they're just going to call in and that's going to be routed to you. And that's already happened like a weekend. So like when you do good marketing, it benefits everybody, not just the people that you intend it to benefit.
Right.
You know what I mean?
Yep. I do. So that channel conflict is a real thing, and I hear about it from agents when we go out to events or ride-alongs. And I just wanted to clear up two things. One is some agents have a perception that our direct rates are always lower, and that's not the case. I talked earlier about how we solve our models separately. We try to target the same loss performance. So that can result in some agency rates are lower than direct, and the agents might not always hear about that. A customer might have shopped both. From our experience, we don't see that. That's not the case typically.
Right.
They tend to focus on one or the other. But that customer might not tell the agent like, oh, but your rate's a lot lower than what I just looked at online. But if maybe they see a low rate online, they might tell the agent like, hey, I'm not going with you because of this.
Yeah.
But solve the model separately, target the same indemnity level. And we do see, rates do vary. The other thing that we try to do is just protect our agents. So if we see an agent has quoted a piece of business, we won't do any direct marketing to that prospect or that customer for some period of time. Yep. And if an agent has a piece of business and that customer also has a piece of business in direct, maybe their motorcycle policies in direct, but their home and auto are with that agent with Progressive, we won't market to them from a direct standpoint. So we have processes in place to make sure, your book of business and the prospects that you're targeting, that we're not sending direct. We can't prevent them from seeing a TV ad or a billboard, but we won't do any kind of direct targeted campaigns.
I almost want to get you to say that twice, because that's a really good thing. Really good point.
Great.
Yeah.
Yeah. The one thing I've heard agents in my office say, they'll come to me very occasionally, but it has happened. And they'll say, well, I quoted this guy through Progressive, and then he goes to Progressive and gets a quote. I'm sure you've heard of this before. And, lower rate through Progressive Direct. But you've said it a couple times on this podcast that the way the pricing model is built out, it's just different. It's just different.
Yeah, it's just different. So there's no kind of intentional subsidies that we're building in there, and there are also timing differences. So I've heard, a customer went to one agent, and then a month later they went to another agent, and they saw different rates.
Correct.
Or maybe their renewal was coming through their current agent, and then they got a Progressive, offer from a different agent, and those were different. So there are timing differences just in terms of how we file rate changes and how we think about new versus renewal rates.
It's also very state specific too. Like, I'll see things in forums where people are like, Progressive Direct, it's always cheaper. But people only have a view, a lot of agencies only have a view of the industry from their perspective in their 30 miles around their office. And there's going to be certain areas where one is cheaper than the other, and you're more competitive here and you're less competitive here, and that sort of thing. You know what I mean?
Yeah, and that can also happen. We file our direct product changes at a different time than our agency because, again, we manage and kind of roll out these things at different points in time. So that can happen. There can be local differences.
I cannot imagine how many people it must take to with
File
each
those.
state and filing, and then now we're doing it kind of a segmented direct files at one time, and the independent channel files. I can't even imagine how many people it must take to deal with all that. I mean, that is just nuts because you've got to deal with every state in the United States of America. So let's talk a little bit. I want to move on to talking a little bit about state of insurance right now. And I want to get into auto and property as well because, I think these agents probably want to hear from your mouth, like where do you feel like insurance is today? And then fast forward, say 5 years from now, what changes you feel like are going to happen with artificial intelligence, driverless cars, all that kind of thing. So what's your take, first of all, on today?
Yeah, so I go back to what you just brought up, like the army of people that we have to think about rate changes and the size of our book of business. And I think what that does to us is, we're always deploying our latest model, and like a big part of our value proposition is competitive rates. We think we have better segmentation to match rate to risk than any other carrier, especially on the auto side.
I would agree.
We want to get there with property, but we're there for auto, commercial auto, our recreations lines. And so, that requires to have really accurate claims information, accurate reserving information, strong data governance, the models that we can kind of continue to build off of. And then we need pricing indications. We have a whole pricing department that's constantly looking at, frequency trends, severity trends. How do we think the future is going to look to price over 6 months or 12 months? Then we have our state product managers that are taking all that information to get that into the state and working that regulatory framework to get things approved, to get those things out. And we're always deploying a model while we're building our next generation model, while we're researching our N+2 kind of model. So that's a huge, part of what Progressive's value proposition is, how we try to compete, provide accurate competitive rates in the market.
You said N+2. Is that now plus 2 years?
Yeah, or two models out, right? Okay. So we're deploying one, we're building one, N+1, and then we're researching N+2. Yeah, thanks for that. And so our cadence and our ability to kind of as a factory deliver new models every 18 months to the market is something that I think really drives and sustains our success. We see a lot of competitors copy our product models that we file, but because we're already like building the next one and researching the next one, we can stay ahead of that.
Well, you mentioned something that reminded me of a point I wanted to make. So that there's a certain insurance carrier that has a lot of fanboys and fangirls on Twitter, and they all hate me. I'm not going to say who it is. And some of the the insurtechs come in most of the time with a very egotistical, boisterous viewpoint on things, and seem to think that they can do things better than the data that they have. And a lot of times I'll say, like, guys, you cannot imagine the data set that Progressive has.
100%.
Or anybody that's been in the business, but especially you guys, and how you can model and price things significantly better based on that historical data.
Yeah, no, I agree. I think that's a big part of our defensive moat. And I bring all that up as a way to think about our current state, because we use a lot of that to separate signal and noise. And so I think we're usually ahead of the industry to see where prices are going and expenses are going. And so we typically take our rates up before the rest of the country or the market understands we're going into a hard market cycle. And that can be a tough time because we're taking rates up before everybody else to make sure we hit our profitability goal. they're still open for business, but then eventually they recognize that, hey, they're underpriced, and to keep up, they need to take rates up or shut things down from an underwriting standpoint. That's usually when we're already well positioned
Right.
to grow. And so we tend to grow really fast when the market's going into the hard market cycle. And the success we've had for really the last however long the market cycle's been pretty challenging on the auto side. We've had explosive growth. And so now I think we're starting to see more of that soft market,
Yeah.
especially on the auto. And so, we just had our year end. We grew PIF 10% in 2025 and wrote that at like an 85 combined ratio. My boss, Pat, often says, hey, it's easy to make money in insurance. It's easy to grow in insurance. It's hard to grow and make money in insurance.
Yeah.
And that's kind of the place we've lived really for at least the last 10 years relative to the market. And so now I think we're going into the soft market cycle. We've been, taking rates down to make sure we're achieving our profitability goals, but also opening things up, whether that's bill plans, underwriting appetite, opening up non-res and resident appointments to make sure, our agents have the ability to sell Progressive, offer Progressive to all their prospects and customers. And we're seeing more and more of that. So, more carriers are doing more to advertise. They're taking some rates down selectively where they can get rates back. They're opening up their underwriting. So I think we're going to be in a very competitive market for auto. And maybe that market, I think it's interesting to think about technology and how quickly, do the market cycles get shorter as people make these changes, quicker than maybe they had in the past and recognize kind of, where we are, or are we going to be here for a while? We'll have to kind of wait and see kind of how inflation and costs pan out.
Which market? This is probably an easy answer to this question. Which market do you prefer? Do you prefer things a little bit hard or a little bit soft?
That's a great question.
Because I'll tell you, me.
Man, it's
so I went to a carrier meeting a couple months ago, and 100% of the conversation amongst the agents and the carrier was, we're actually losing business because everybody's so competitive right now.
Right.
And I was like, to be honest with you, like, I kind of like it being a little hard, short of carriers not writing business. Like we acquired an agency in 2024, right in the middle of the hard market. Me and my ops guy, Kenneth, were leaving that office to come back to our main office. And I said, the beautiful thing about this is even if all these customers want to leave, they can't. So we know we're good for like a year or two, but which one do you guys prefer, you think?
So I think it's when we're open for business and the rest of the market isn't. That's kind of the biggest growth. I also think, like we talk about this magic quadrant. So we think about a 2x2 with combined ratio as maybe the horizontal axis, and growth kind of being the vertical axis. Again, we go back to the segmentation and our ability to kind of segment risk better than anyone else. If we're running at our 96 combined ratio target, so making 4 cents on the dollar, and we have the best segmentation out there, we're pretty sure that if someone has a lower rate than us, they'll lose money on that risk. Now, if the market's sitting at an 82 combined ratio, they probably won't be losing money on that risk. They won't be making as much money as we could have on that risk. And so I think it kind of gets to your answer of like, all right, the closer we are to our goal and maybe in a more normal market, then we can kind of be in that magic quadrant by ourselves of making money and growing. Whereas right now you see some of the results that people put up in Q4 from last year. A lot of them are showing kind of really strong profitability. Some of that could be led by property. There wasn't a lot of wind kind of last year, and so it was a really good year for property. I think a question I have around, there's still some local markets that are really hard. Coastal markets you talked about earlier, Bradley. But I think there are other markets where we're going to see a lot more competition in. And a question there is how quickly will people respond and say, well, last year was good from a wind standpoint and storms and weather standpoint, so let's get really aggressive. Or would they say, no, we need to see a few years before we really kind of want to go there?
Because it's like, that doesn't mean this year won't be active.
Absolutely.
Yeah. It's transition a little bit. Scott mentioned driverless cars. So I sat in a carrier meeting in 2014, and CEO of the carrier was in there, and they were talking about driverless cars. This was right when Tesla, I think, had launched basic autopilot. And
by the way, I don't mean to interrupt, but this morning in my Cybertruck, Seth was telling us that Texas,
Very soon,
I
Texas is
thought
going
they
to
said
let you
this week,
something
you
like
can
that.
now sit in the back of your Tesla and let it drive
Oh,
you.
really?
So
So
they're talking about this in 2014, like it's some black swan event, right? And obviously, if the caveat there being that everyone has to have a driverless car, I think, for that to happen. But where do you see that playing into just the auto insurance market as a whole?
Yeah, I'll maybe take a broader kind of view. Like we always look at vehicle technology to try to understand what does that do to frequency, what does that do to severity. You go back to ABS, or you go back to lane detection and
Right.
crash avoidance technology. So we're always looking at that. We're a big sponsor of the Insurance Institute for Highway Safety, where they crash the cars together and they publish consumer reports kind of articles. So we're always looking to understand how does technology affect frequency, severity, where a cost going to go. Should we provide a discount, right? So you'll probably see in a quote that you can provide a discount based on certain trim models and vehicle technology. And so we've been doing that with the driverless car kind of technology as well. We work with some of the ride sharing companies like TNT, like Uber and Lyft in the past. We have had conversations with several of the ride sharing kind of driverless taxi services to understand opportunities to work together. So it's impressive. The technology is really impressive.
Yeah.
I think, but you hit on it. It's like, well, what's the fleet turnover rate in the U.S.?
Right.
What happens to vehicle ownership? And so that's a big, very slow moving curve.
Yeah.
And so I think that are there discounts that we could provide to people based on the cars they own, or how they take rides, if it's through ride sharing services or these robo taxis. Yeah, I think that's probably nearer term. But the long term impact, kind of unknown how broad and how quickly the fleet could turn over.
Yeah.
If you use historic standards, it's decades out
Yeah.
before it has kind of a meaningful impact.
When
'Cause
and
you're
you
right.
also have this political side of things too, where you have a certain group of people that are like, I'm never going to let my car drive. I'm too much of a control freak, until you do it, then you're like, oh, this is actually kind of nice,
and safer.
But and the two, I'll tell you another angle that we need to think about. So I was in Austin a month ago, and my wife and I went to a restaurant, and we were going to Uber back to the hotel, and the Uber was, I think, $17. And I remembered Robotaxi was there. So I go on the Tesla Robotaxi app and I order one. It was $2.13.
Wow.
And we get in the car, and there's nobody in the driver's seat, and it drives us to our hotel. And one of the things that Elon is talking about is if you have a Tesla with full self-drive, eventually you will be able to, when you're not using that car, lease it out
Right.
to Robotaxi. And there's a rev share there for you doing that. Now, I don't want to say that every Uber driver or DoorDash driver hasn't told their insurance company that they're doing that, but there's a large percentage of them that probably haven't, right? So you have to solve for that too. Like if I'm leasing my car and I'm not in it, you know what I mean?
Right.
And then two, the other thing on the driverless car thing is, let's pretend everybody has a driverless car. I have a Tesla with full self-drive. I'm in full self-drive 93% of the time. If every other car, it makes mistakes sometimes. Usually it's around parking, trying to find a parking spot. It makes very few mistakes on the road. If everybody had a car with full self-driving or self-driving, that is going to have a positive impact on loss ratios and rates potentially going down. But you're talking about the technology in a Tesla versus the technology in a car that's 10 years old. That plays into, so does the increased technology and what that would cost in a claim scenario does that offset the loss rate? You know what I mean?
Absolutely.
There's a lot of things to think about. And then you get into like, okay, if the car makes a mistake and crashes, is that on the owner of the car, or is that a product liability situation?
Yeah. So we have I'm kind of, our claims team would be more appropriate to talk about this, but we have a whole team that's focused on how do we think about these situations when they're coming up. How do we get access to information from the car, which has been a challenge with some of the
Yeah.
OEMs. Yeah, we are, and I think you're right to your point of like, hey, with all this technology, maybe frequency's gone down, but when that car has an accident, the cost to repair what's in the bumper has gone way up.
Yeah.
And so we haven't necessarily seen huge decreases in pure premium, kind of the combination of frequency and severity because of technology so far. But yeah, we absolutely keep our eye on this.
Thinking about telematics, you guys were the first to do the plug-in.
That I know of.
Yeah. There's two things I think every auto insurance carrier should do. Requirement. One is everyone should have to use telematics for it to work properly, I think. I do think 20 years from now, we will see a world where every auto manufacturer just links up directly to your insurance company. The other thing is I wish every insurance carrier on auto would eliminate any type of permissive use, and every driver that drives that car has to be on the policy, and it would eliminate people not adding their teenagers, which is a problem.
Right.
What are your thoughts on those two things, specifically more the telematics piece?
Yeah, so telematics to me is really interesting because it is a big advantage for us. If you want the most accurate rate, it's got to be priced through telematics. And what we see is when consumers are offered the opportunity to enroll or participate in telematics, they generally say, yeah, I want that. And so we can see it through our direct channel. When customers are offered telematics, the take rate, looks really solid.
Interesting.
On the agency side, we see a very low attachment rate. And we think it's because agents aren't always offering it because maybe, there are a number of reasons in this space. I'd be kind of curious your takes on how often and as part of your SOPs and your agency do you advocate for it. Right now, we're offering it's a 15% discount at new business if they enroll. And the majority of customers, their rate, they keep that discount or they get a deeper discount upon renewal. But the way I think about it is like that's the most accurate rate that customer could possibly have. And so if they were to shop, they probably can't get a lower rate anywhere else. It should be a really sticky customer. And those that actually do see an increase, like to protect your loss ratio and profit sharing, like you'd want that increase to flow through. And if they end up going somewhere else, that's probably a good thing as well for your agency.
Yeah.
So kind of curious how you think about telematics within your operations.
I think that's a really good point, guys. And honestly, it's got me thinking about my agency because from a retention standpoint, that's phenomenal, right? I think most producers have a bird in the hand is worth two in the bush mindset. Like, I've already got this customer on the hook. I don't want to have to ask for something else. You know what I mean?
Right.
Like, okay, they're interested. I'm not going to push any further. And the reason I say that is we've even seen that in our agency. We've had an issue like the last year with people rounding accounts and us almost having to like force people to round accounts. And it's like, well, I've got them. I don't want to be too, pushy. You know what I mean? And I think that's probably what it is. I think also too, when you're dealing with multiple carriers, it gets complicated on, like, it's funny, like I'll tell my wife who's a captive agent, she'll hear me complaining like, oh, if every carrier would just do things the same way, my life would be so much easier. And she's like, well, that's why you're independent. Like, it's never going to be that way, and I think part of it is just remembering, honestly, like this carrier does this way and this one has telematics, this one doesn't, et cetera, et cetera. So that would be my take on that. And then, you're going to have some customers that maybe have controversial big brother conspiracy theories and things like that. And
Sure.
they try to avoid those people. That would be my take. I don't know about you, why you think.
I have very strong opinions on telematics.
I know we're about to get into it. That's why I spoke first.
Number one, my agencies, I think the salespeople, the marketing reps for companies and carriers like Progressive, they have that data available to them to show like percentage times it's offered in a quote.
Right.
And my agency, because most of my personal lines agents have been doing it for like 15, 18, 20 years, they do offer it quite frequently. I think the last time, and Russell, correct me if I'm wrong, but I want to say we were like a 75% offer of offering telematics in my agency, which I think is probably higher than the national average. the other thing that I've heard my agents say is, oh, we don't offer telematics with Progressive as much because other carriers that we have with telematics don't penalize you if you put the telematics on and you don't drive good. Or you don't, if you're, if the driving's not great, they don't penalize you, but Progressive, I think, does penalize you. I've heard that before.
So yeah, you can get a surcharge for aggressive driving. The vast majority get a deeper discount or maintain their discount at
100%.
renewal. But I think that's
100%.
where it
then
goes.
you get into the loss ratio protection,
Correct.
too.
Absolutely.
Yeah.
Anyway,
it's interesting that side of things. It's a funny story. So, Tesla Full Self Drive has gotten really good in the last month. I mean, I think I'm getting a software update like every week because they're improving stuff. And I have a telematics device in my car, and my Tesla has 4 modes on Full Self Drive: slow, standard, hurry, and then Mad Max. And Elon said on a podcast recently that Mad Max was designed for, like, you have to go to the hospital. It's going to weave in and out of traffic. It's going to tailgate, all that kind of stuff. And my wife called me last week and she said, "You are driving like a maniac." She's like, "We just got a surcharge. Like, your thing, this device." And I'm like, "Oh, that's not me. I'm in Mad Max mode all the time. That's what that is."
Is that how you?
Yeah, that's why I stay in Mad Max all the time. You got to get there in a hurry, dude. Car's not going to crash. It's going to, but it's going to be interesting to see what the auto insurance landscape looks like 10 years from now with all of this.
And I purposely didn't ask you 10 years because 10 years is too long to ask
Yeah.
anybody. Like, I don't know. I don't know what 10 years was going to look like.
If you look at fleet turnover patterns, it won't change that much. But eventually, yeah, I think there could be a
where is in your mind, where's your blue ocean here? What do you see as, like, 5 years from now, you're like, man, we need to head in that direction too, because there's a huge opportunity there.
All right. So I go a lot of different places. So I think about, where we have, even though we're number one in the IA channel, I think we're close to number one in auto. Excited to kind of see that play out. One of the areas that I get really excited about is we still have very little market share overall. And so if the market's $1 trillion, and we have 85 billion, like, that's less than 10% share. And so we have a lot of opportunities across the board. So whether it's preferred bundles, as we kind of figure out property, and we've been doing a lot of work to get our property products in a place so that we can have competitive rates and broader distribution, meet more of the needs of your customers. Huge opportunity there. I think we only have 3% of the bundled market overall in the United States. Commercial line, similar journey, right? So number one in commercial auto by far. We're very profitable with that line. Other carriers are struggling with that, and they always have. We're adding BOP. We're adding other lines of business there. We have very small share in commercial lines. So excited to see us kind of build out that journey. In the agency space, one of the ways I get really excited is, even though we're number one for those kind of core products I talked about, for a lot of our agents, we're not their number one carrier. So we might not be their second biggest carrier. But we have the broadest distribution footprint. I saw a stat. We have 40,000 kind of parent codes that we have appointed with 90,000 locations. 90,000 locations in the U.S. is twice the size of every McDonald's, Starbucks, Dunkin' Donuts, and Burger King combined.
Wow.
So think about that. Like, we have more distribution points in the IA channel, and that's what gets us to number one, is maybe we're fourth or fifth for that agent.
Right.
So I have 4 kids. Lucy's the oldest, Bobby, Millie, and then what's his face? Like, to your point, like, you have so many his name is Peter, and he's a big fan of your show.
Oh, well, thank you.
If you have so many carriers, you don't remember all the rules, and maybe they're not something that you reach for automatically if they're fourth or fifth.
Yep.
If we can move up one spot, with every one of our agencies. That's a huge amount of market share.
Yeah.
And so that's one of the things that we think about is like, how do we improve consideration and preference so that we can move up in a rank order with a lot of our agencies? So we think about technology. How do we improve the technology? One of the areas I'm really intrigued about, how do we make Progressive a better extension of your agency for your customers, maybe to help with account rounding or to help with retention in ways that
communications. We talked about that last night.
Yeah, communication. How do we connect with your customers in the style, voice, at the moments that you want us to for your agency? So when your producers are saying, "Hey, I have a choice of where to put this risk or this prospect," if I put it with Progressive, I know they'll be taken care of. I know Progressive will like nourish that account and maybe help us retain or provide better risk protection for that customer. So that's one of those areas that I'm really excited about. I think we have a lot of share potential as we build out these other products, as we improve the product models. But how do we prove a consideration and preference with agents so that we can move up and become that third, second, or kind of first carrier more often?
Well, I'll tell you one thing I think that you guys are doing well that is helping with that or will help with that. We're in a world where, COVID happened, right? Like I remember I started my agency the year before COVID, thank God. And I had reps for certain carriers that would come by my office, that wanted to come by my office to inspect it. This was back, pre-COVID, it was kind of, we toured the Progressive home office here and, I think every floor, Mark said, this used to be full. There's so many people working from home, right? Pre-COVID, it was kind of like frowned upon if you had either a digital agency or an agency with work from home employees or remote employees. And I remember I put a video out right when COVID started. I said, this is going to blow that wide open because people are going to realize like, wait a minute, we're more successful with work from home people.
Well, the insurance industry was made for COVID.
Well, and what happened with COVID, we've seen this with other carriers is, okay, so for example, the carrier that I used to work at, the captive carrier, my district manager, my rep basically had a 2-county territory. COVID happened. All of a sudden, the reps couldn't be in the offices. Well, the housing market was good during COVID. The insurance industry typically follows the housing market. Everybody was more profitable. Like, wait a minute, we're doing better and the reps aren't in the office. And now that person that I mentioned that had the 2-county territory, he's got a whole state territory. So many carriers are eliminating marketing reps and consolidating territories. And like we've got a couple of carriers that I hear from the rep once a year and it's a Zoom meeting. They've never been to my office. You guys, at least from my perspective, are doing the opposite. We still have the reps in the offices. And I think it's a zig-zag scenario. When other people zig, you zag. And I think with producers, you have to get in front of them. You have to remind them. You have to
stay top of mind.
Stay top of mind. We do this. But having the reps in the offices to build that relationship, I think is very crucial.
It never fails when a rep leaves the office. 2 hours later, we're writing a piece of business for that carrier.
You've got it with producers, man. It's most of them are fly by the seat of their pants. The thing that's the top of their mind is the thing they're going to do. You've got to just stay in front of them.
Let's talk property for a minute.
All right.
Because, we were writing some pretty good little bit back in 22, 23. We were writing Progressive Home. I think a lot of people listening to this show right now, their agencies were writing some Progressive Home. And then, like a lot of carriers in the hard market, you guys, again, you weren't the Lone Ranger. I mean, it was across the board, but really tightened your belt on what you would take. And at least in the state of Alabama, and I know it was probably other states as well. And that while our book of business, you guys are by far our biggest standard auto book of business in my agency to the tune of millions of dollars. But I think we got about 12 ASI home policies with y'all.
Right.
I'm just keeping it real, Sure. That's kind of how it is. And it seems like now the last month or two that some of the restrictions have been, kind of lifted or at least loosened up a little bit. But where do you stand on the home product side with Progressive?
Yeah. So I'll go back to your point about reps. I mean, our account reps are a big part of agency distribution, obviously, and they're important for us. And I think that's a key unlock for how we'll get from third to second or second to first within a lot of our agencies. Not every account has a rep, but we want to make sure we use technology and data to empower our reps to have those more meaningful conversations and find those win-win moments. A big part of what they did last year, Scott, was we kind of stepped back with property. So we call it our blueprint of the future. We bought ASI in 2015, or I think that's when we took the controlling interest, and we tried to scale it very quickly. So I think between the hard market showing up and a recognition that hey, we hadn't made money for years with property because we took maybe a product that wasn't as mature and tried to blow it out there. And so last
they were
year,
a relatively small company when you guys bought them.
Right.
yeah, they were relatively small, a lot of coastal exposure, Texas, Louisiana, Florida, and
their motto used to be, "We run to the wind, not from it," or something like that. Like they would targeted that.
And I think at the time Progressive bought them, like there hadn't been named storm events for several many years along those parts of the country. So then we bought, the weather shifted. There were a lot of events. So took a product that wasn't quite ready, maybe for national distribution. Gave it to a lot of agents, and we had a specific goal. We wanted to hit 1 million Robinsons. Robinsons is kind of our persona for a bundled auto home customer. We hit the goal, and my boss talks about, hey, we should have said we want to hit 1 million profitable Robinsons. We might have taken a different tack. And so last year was important for us to recognize all the trends, things happening within property, the roof exposures, to make adjustments. Hey, let's make sure, we call it our blueprint of the future, blueprint for property. Hey, let's make sure we get our product right. That includes more risk sharing, making sure we have the right rates, rolling out our latest model. We talked about the segmentation models that we developed, and we're starting to create more of that capability within property. And then let's right size our distribution. So we actually took property away, terminated about 5,000 property agency appointments. And it's a lot of the agents that maybe weren't using us very often. They were giving us one or two, and maybe they didn't understand our underwriting appetite. To your point, we weren't a core carrier for them. They didn't really understand where we would fit, and so we were maybe getting the ones that they wouldn't be able to place with their core markets. And so we've done that. So now we're in a place where last year, and again, weather was a part of the story, but we hit our profitability goals even if we remove the effect of weather. And now we're talking about, all right, as we roll out more advanced segmentation models, as we make sure we're in the right place with risk sharing. Maybe we're ahead of the market in some states like Pennsylvania and other states along the coast. Maybe we're where we want to be, and also kind of reshaping our mix. So how do we get away from 70% Florida, Texas, Louisiana? Maybe we only want 20% of the business there. So there were ways of some non-renewals that we did to make sure we got to a place where we felt we could hit our profitability goals on a calendar year basis more often. And we feel like we can see the light now. And so I was in two meetings yesterday about how do we think about opening property back up again. We're already taking away, you said you'd noticed this, we're opening up some of our underwriting, guidelines, accepting maybe slightly older roofs than we had a year ago. And so, we'll continue kind of that journey. But, again, that's part of that blue ocean. I'm really excited about how we've kind of rebuilt our property offering and where we're headed, because I think we'll be in a really good place to be that core market for your bundle customers.
Absolutely.
Over time.
Yeah, John Sullivan came to my office last year and said, we're eliminating we're eliminating X amount of property codes. You're not one of them. That's exactly what he's like, before you get excited, you're not one of them.
Yeah. And so that's a hard message, it's never a fun message for reps to go out and deliver, but I think they did in a way that when we look at production for a lot of those accounts that don't have property anymore, they understood it, and they're continuing to kind of build with us from an auto.
The thing is, you're not the only one. It's not like it's in the middle of a soft market and your waves of non-renewals and things like that, right? If it's following the rest of the market, I think people understand. So I sent out a message to some of our podcast listeners on the way here, and Jason Kilgo actually asked a question that honestly I can't believe is not on our talking points. How are you guys looking at AI and integrating that into your process with the abundance of data that you have?
Sure. So, I think I'd say we've been ahead of the market in a lot of ways with how we think about it from a predictive standpoint. So how do we think about risk and underwriting and kind of building really complex models that also kind of fit within the regulatory environment that we operate in. So I'd say we've been ahead of that, and we continue to kind of keep the foot to the pedal there. I think we've always been keen on having a very low expense ratio and being really operationally efficient, whether that's claims, that's our customer service, which is where a lot of our dollars are spent. And so, claims is doing a ton to think about, photo recognition to improve the claims process. To really, I'd say right now the focus is mainly on how do we be more operationally efficient
Yeah.
as we've grown. So, last year we had 85 billion. That was like 15% premium growth, a lot of unit growth, 10%, 12% PIF growth. As we've grown, and like that's not unusual. We've kind of been in that pattern for the last couple of years. We've had to add, 5,000 jobs, 10,000
Right.
jobs, 20,000. And so I think now it's like, all right, how do we continue to grow and use AI to be operationally efficient? So I think there's a lot of work going on that front. As I think about the agency channel itself, we're kind of trying to understand more of what agents are expecting from us, and do our systems enable that? And so if you were to build an agent, like an AI agent that you wanted to use to go and get ID cards from your carriers, like how do we make sure if that's a transaction we want to allow you to do so you can be more efficient,
Right.
that our systems allow that to happen?
Right.
So I'd say we're kind of in a journey to make sure we understand what are our agents expecting, how do they expect access to our systems, and what capabilities should we make sure we provide that capability for.
Yeah.
And then we think about our sales resources again, where I think we're people led, but we want to empower them with that technology. And so we have a number of things that we're doing to help our sales reps. They get so many reports a year. They have so many tools and systems that they have to kind of interact with to do their pre-call planning, or to help develop a plan with an account.
Yeah.
If we could figure out ways to pull all that together and serve up recommendations, that could be really appealing. So I'd say those are like near-term things.
Yeah.
To your point about like 10 years out, 5, like it's kind of
knows?
hard to know where things are going.
Well, it's also like, 2 years ago, everybody was talking about crypto and blockchain and NFTs, and it was the crypto revolution. And in some ways, the AI revolution of 2024 makes that look like child's play. But it ended up, it's still here. It's going to be here, but it's okay. I'm not going to change my business model for the blockchain, right? And so it's also hard to know, is this something that's actually going to change things, or is this another fad? I think it's pretty safe to say with AI, it's not. It's here to stay,
right.
But you also have to solve for that too. You run into a .com bubble situation.
Right.
I would think the two biggest areas that AI could, where money would be spent from any carrier, I'm not talking about Progressive, I'm talking about everybody. Underwriting, I could see AI being like very helpful in the underwriting side of things, and then in adjusting, especially the common fender bender auto claim, where the customer, if they don't have a Cricket phone, can, like my Android or your iPhone, just snap a few pictures, send it in, and it just boom. Here's I could see those two areas being very
I'll tell you one thing,
AI centric.
I'll tell you one thing I did is we just got a simple IRA for our employees. I did this on the plane on the way here while we were sitting beside each other. And I was enrolling myself, and it gave me like 15 funds to pick from. And I was like, I don't feel like reading all this. So I opened up Claude Cowork, and I said, tell me which one of these funds would be best based on, and it opens up a tab. It goes to Yahoo Finance, and it's like, you need to do this one, So I think from a carrier standpoint or an agency standpoint, I think with agentic AI, especially, it's what are mundane things that I'm doing that's not necessarily consequential, but it wastes time,
Sure.
So Scott and I are from Alabama. I always like to start out usually when we are not in Alabama with neither one of us are Alabama fans. And usually that gets applause. Usually.
Yes.
We are Auburn fans, and Auburn has a quote that they often say to new coaches, that if you love Auburn, Auburn will love you back. And honestly, I feel that way about you guys. Like, if you love Progressive, Progressive will love you back. Feel free to trademark that. What do great agency what he was writing that down. What do great agency partners do differently compared to not great
Such a
agency
good question.
partners?
You're asking some really good questions today.
I'm prepared.
It's unusual.
Yeah. So, yeah, I think the great agency partners, we want to have that mutual. We're looking for those win-wins. We don't necessarily. I mean, if there are times you might say, hey, we want to take premium from the left pocket and put it in the right pocket because like that carrier we're using, isn't where we want to be longer term. But our process and our sales process with our reps is really more consultative discovery. What are your goals? How do we work together for those goals? So we're looking for that transparency. If you can kind of open up and share, hey, this is what I'm trying to achieve with my agency. We're trying to make sure our reps are equipped with tools to say, okay, well, I can help you get there.
Mm-hmm.
Now let's come up with a path. Maybe it's using more telematics. Maybe it's routing accounts with rec lines. Should we give you access to our bot product? Like, what kind of training can we help provide your producer? So it's really important to be able to have that conversation with a rep, so we know where you want to go as an agency, and that we can develop a plan to help us get there. So that's one. Two is then giving us feedback. So whenever we do agent events, we're always doing roundtables to understand what is it that we could do better. It
Yeah.
might not fit our model. We might feel like we're in the sweet spot on a certain thing that agents would say, hey, like other carriers do this better. We might say from an economics decision, like
Yeah.
we feel like we're making the right trade-off there, but we want that feedback. So we want to know when we're doing things well. We want to know when that we have opportunities, and especially if we're not going to get everything right all the time. And so we want to make sure that we have the opportunity to make it right if something got screwed up. And so I think it's communication. I think it's like any relationship. That kind of communication is really what's critical.
Yeah. Yeah. It's how do you delineate what is good feedback and what is not good feedback? Because I always tell people, like, a good example of this being an insurance podcast, probably 100% of the people listening to this play golf. It's just kind of an insurance thing. And when you first start playing golf, everybody is going to give you advice. And if you listen to everybody, you're not going to make contact with the ball. How do you decipher what's good feedback and what's not?
Yeah, it's a great question. And I think we just had our agency council in person
Yeah.
a couple weeks ago, and we have a great agency council.
Josh Bagby
Yeah.
he was a buddy of mine.
He's
Yeah.
awesome.
Yeah.
So I think the best feedback is when they also are able to kind of put a progressive hat on. Like, hey, from your standpoint, I think about it this way
Yeah.
to create that win-win. And sometimes when we get feedback, we help contextualize, well, here's how we think about that. And again, I think it's being able to have that open conversation that says, I get why you as an agent might want that. Here's how we think about that.
Mm-hmm.
And so some agents kind of equipped are already coming to the table kind of with that empathy as they kind of share that feedback.
Yeah.
But then again, it escalates up to like, hey, I don't think you would have wanted this to happen. And so I want you to know about it. And like a lot of times we're like, wow, yeah, that wasn't the outcome we were hoping. Let's make that right. How do we fix that?
Mm-hmm.
But I think it starts with open communication. And then I think having that kind of empathy is critical.
Yeah. Any upcoming initiatives or anything like that with Progressive that agents need to know about? In my opinion, you guys are poised for growth right now. I know that's probably one, but what do people need to know listening to this?
Sure. Thanks. So yeah, auto, we're pretty much wide open for growth. And that's, our personas are SAMs, which maybe the market thinks of as more non-standard, someone that doesn't have prior insurance. That's been a great market for us. We see opportunity there. As maybe we focused a little more on property and the Robinsons persona, that
Yeah.
bundled customer. Maybe some agents internalize that as that we don't want kind of those SAMs or non-standard customers as much. We absolutely do. We're wide open across the spectrum for auto in just about every state. Rec lines, same thing. So we're number one in boat, motorcycle, RV. Those are kind of the jewels of Progressive, like just great products for enthusiasts. We'll take care of these assets that they have an emotional attachment to in a way that I don't think anyone else can. Commercial auto, we feel really good about where we are with commercial auto. Property, we talked about kind of where we are in that journey. We have some improvements that we'll continue to make. I expect we'll continue to open that up and excited to see where that goes. We're also kind of in an early mode with some of our other commercial lines, BOP and GL, but we're starting to see more and more success with those products. So I would just say if you're looking for growth, if some of those are opportunities that you want to take advantage of, talk to your rep. Other areas that I'm excited about is that we have a lot of producer incentives that we get really good feedback on. We're bringing a lot more technology, to bear. We're making a huge investment. We're actually investing in the independent agency channel at levels that we never have in the past.
Mm.
So we're modernizing our licensing and compliance platform. If you've been through an acquisition lately or have had to add producers, we're really not like achieving the service level standards that we think we need to be able to help your agency achieve its intent. So we're doing a huge investment there. We're doing a big investment with our commission systems to provide better self-service capabilities.
Can I poke fun at that real quick?
Yeah.
So we did an acquisition in last year, and the progressive part was done quickly. The ASI part took longer, and I got a few months ago, I got the confirmation it was done. And I texted John Sullivan and I said, we started this during the Biden administration. It was just, I wasn't impatient. We still had access to both code. It wasn't a big deal, but yeah, that's good to hear, because I know there's people listening that have been through that, and it's been a little bit of a slow process.
Yeah, and we acknowledge that. So we've been staffing up to be able to do more work manually while we're waiting for the system to come online. But we're really excited about, bringing that online. And then, we're always building out and rolling out the new models. So better segmentation, and getting aggressive with rates, especially where we can. We're adding a renters as an endorsement, feature to auto
Nice.
policies. That's in a handful of states, but with like 1 or 2 clicks, if renters is a need or an opportunity, we're seeing a really healthy attachment
So it's
rate.
basically just like a drop down or check box, and you could have a bundled renters and auto policy.
Yeah, it's an endorsement to the auto policy, and so it's one bill. But so that's rolling out.
What are they gonna think of next?
It's almost like some home carriers doing a flood endorsement. It's sort of like the renters version of that.
And for young people, that's brilliant. Like my stepson, it lives in Nashville, has a progressive auto policy with us, and has a renter's policy. But that would be great to just be able to check box and go kind of thing. That's cool.
Yeah, and we've added things like progressive vehicle protection, like almost a mechanical breakdown, key fob replacement. So, we're always looking at, new segmentation, expanded appetite, and then, hey, what new coverages, could we add? So there's more in that space that's coming down the pipe.
How close do you pay attention to what other carriers are doing?
So it's important. I think we're not necessarily trying to copy them, but I'd say we do more market research with agents to understand, hey, what do they see as areas where we could be better? Now, they might say, and like the conversation might be like, well, who does it really well? And let's kind of go and understand that. But, we see a lot of competitors like copying us, especially from a segmentation standpoint. But, we want to, I think the energy we focus on is how can we respond to kind of agent feedback and do better at the things that are really important to us.
Well, it's kind of like there's a famous story of Simon Sinek did consulting for Apple and Microsoft like back-to-back weeks. And he said at Microsoft, 100% of the conversations were around beating Apple. And at Apple, 100% of the conversations were how do we make people's lives better? It's like, it's all about what you focus on, I do think you should pay attention to your competition. You can't, and so like I tell people around like direct-to-consumer insurtechs, like the way you get hurt is by having your fingers in your ears and not paying attention to what's going on. At the very least, just watch what's going on. Same thing with like AI and stuff like that. Like if I talk to an agency owner that hasn't implemented AI, a lot of AI fanboys will say, oh, they're going to be behind. I'm like, no, you're not behind if you haven't implemented it. Where you get hurt is if you're not paying attention to what's going on, because especially if you've owned your business a long time, like you have to give yourself credit. You've seen a thing or two, and you will know when the right time, when you see the thing that is going to change things, So I think it's important to do that. Personally, me, I love to mystery shop, like especially if we're going into a market, I'll call an agency and just see what's going on. We hired a producer in New York, and I was calling some agencies, mystery shopping in that area to see what markets they had and things like that. And one of the people I called said, is this Bradley from the Insurance Guys podcast? And I was like, well, I can't do that anymore.
Yeah, well,
you definitely couldn't do that.
No.
You have a more distinctive, But we mentioned, sorry, go ahead.
No.
We talked about core values earlier. Do you want to talk about Progressive's core values?
Sure. Yeah. So you folks can't see it, but we're in a room where we host a lot of meetings with our large independent agency partners that are in town, and the wallpaper on the wall includes a lot of those core values. So I think about the culture, and I think about one of the reasons Progressive has been so successful and why it's been such a great place to have a career is these core values. They were written by Peter B. Lewis, decades ago. I think they're largely unchanged, and they're meaningful. We actually use them when we think about making decisions.
Yeah.
Pretty probably common when you talk about to other companies, like we have golden rule and integrity are really important. So we've got to own our mistakes. We have to think about how people want to be treated. We have objectives. So objectives are really important, that we have clear objectives so people know what they're doing and what they're going to be held accountable for. Profit's important in our world. Think about some different competitors. They might be mutual, where maybe they're okay losing money as long as the surplus grows. Our model works. We're shareholder owned, so we got to make sure we return that 4 cents on the dollar from an underwriting standpoint, and that's dogmatic. We'll do things and to counter your goal. If we feel like that's at risk, we're going to make sure we take action to deliver that no matter what. Our whole model is kind of built around making sure we achieve that outcome from an investment standpoint. And excellence is the one that I kind of think about the most. They all kind of fit hand in glove together, but excellence is to me really important. It's part of go back to my kind of story as to how I got here. I didn't want to come to a place where people were just punching the clock for a paycheck. That they wanted to come to work, do the same thing they did yesterday. So excellence is really about constantly asking, hey, how can we do this better? And I think it's led a lot to the innovations that we have, whether that's things like our comparative rating. A long time ago, in direct, we did that. If a customer wanted to get different rates from our competitors, we would offer that.
Name your price.
Name your price. UBI and telematics with Snapshot. The ERVs, the emergency response vehicles that would show up roadside to hand a check to someone if there was a claim. And so, it's this culture where, hey, it's okay to come up with ideas, to test them. If they fail, that's okay, as long as you learn and move on. And so that excellence is kind of one of those things that, I really connect with, is I'm very curious. I want to ask questions. Why do we do it that way? Well, maybe things have changed. Maybe we should revisit that. And that's kind of a big part of our culture to kind of really drive us forward. And so I think, we have a lot of people that are often asking those questions, and we want to give them space to be able to test, learn, fail if they have to. And so those are really critical for what kind of fuels our success and culture.
And is there an extra one?
Sometimes I joke that hygiene could be in there.
He said that earlier.
But, no, that's
well,
not
it's
in
one of those things. I don't remember who it was. It was some famous entrepreneur that has this hiring practice where, when he's interviewing a new candidate, he has another person while he's interviewing them walk out to the parking lot and look at their car.
I was talking about this with somebody the other day.
Is it full of junk? And because it's an indication of other things,
right?
Okay, if the outside of the car's clean, the inside's junky. Okay, this is going to be somebody that presents very well, but has some stuff, and things like that. So I like that one. But I think the core value thing from a culture point is important. Is I've told this story before, but we've got 4 core values, and the first person I fired, one of our core values is we take massive action. And I fired the first person I ever fired. I fired because they were really lazy, late to work. There was several reasons around that, And then I thought back at it, and I'm like, wait a minute, they didn't meet this core value. And so any of you guys who have core values, think about people who've worked out and people who haven't worked out. And usually the people that work out meet all of those, whether you know it or not, if you have true, real core values and you just didn't go with buzzwords. You know what I mean?
Yeah.
But if you hire by those core values, fire by those core values, make decisions by those core values, things tend to work out in a positive way.
Right. And that's it. I mean, it's not just words on the wall or posters in the break room. We talk about these as we think about making decisions. They're really central to our culture and our success.
And I love that you remembered them off the top of your head, because there's a lot of companies people wouldn't do that. And you should, if they're true core values, your people will be able to rattle them off.
Great.
Exactly.
Yeah.
Corey Fischer, thank you for being with us today. I'm going to let you get back to work. I know you need to probably get back to the office. And if you're like me, I've probably got 600 emails sitting on my laptop right now. But I really appreciate you being here with us today. It's been an enjoyable time with you guys. Mark, thank you for your hospitality and for being with us. Rand, Long way from here to Mobile, Alabama. Thank you for coming up today. Thank you. And I believe, is it Brian? It is. Brian, thank you for helping us set up today. So I wanted to give these guys behind the cameras, some gratitude for what they're doing as well. But as I end every episode, rewards come from action, not discussion. Get your ass out from behind that desk today. Go out into the big bad world. Become the mayor of your village. Go make money for your wife, for your husband, for your kids' college fund, for your parents and in-laws like mine that are struggling out there. Go make money for them and write good business for the agencies that you represent, and write good business for the carriers like Progressive that you represent. Bradley Flowers, I love you.
Love you too, buddy. Thanks, Corey.
Guys, you were listening to the Insurance Guys podcast, and we love each one of you. Thank you so much for being a part of our family, and we'll see you back here real soon. Take care.